Hello everyone, Darren at Leviathan here, talking to you from the CME trading floor. So let's have a quick look what is going on around the markets. Interesting. Give me 1 second. Let's do the entire screen. There you go. Well, here we are. And let us just pull up this one here. Right, anyway, so as you can see here, everything's good again. Stock market is higher, yeah, 0.84%, and that is because of this here. Oil is back down, and that is because of potential ending to this war. What came out was that where are we? Again, it's the oil market is taking it seriously because it's off over nearly $6, and Trump has said, or the last thing he said, we should focus on. He will not let Iran have a nuclear weapon. We have great support. Iran wants to make a deal so badly. May have to hit Iran harder, maybe not. But there is progress in dialogue with Iranians, and that a memorandum of understanding and principles that will build the infrastructure for negotiations is to be presented shortly. And there was also claims that we're in the final stages of an agreement to be reached. Whatever, take that with a pinch of salt, as has been the case always. However, we're slightly easing off the interest rate hike bandwagon, even though Europe seems convinced that it's still going to happen. We've retreated a bit on DEES. So at the moment, you're looking at like about 75% chance of a hike by the end of the year, which is down quite a bit from the 98% chance we were on the open this morning. So having said that, I'm going to look at a couple of things here. But obviously, the one thing that is going to probably be on most of your minds is the upcoming Nvidia earnings. And for those of you that did not join us yesterday, I'm just going to have a quick show of this here with our system. For those of you that don't know, again, please go to www.leviathanfm.com, and you will have, for the minute anyway, to the suite for free. And I'm going to hold off on anyone that joins. It will be legacy freebies, but that's not going to be for much longer. Anyway, go to the site, check it out. The trade that we liked for the upside, the one that I was talking about yesterday, was this call fly here, the 255 to 70 to 85 call fly, getting in here, and it's round about, you're going to be paying like 70 cents for it, probably crossing the bid ask. We value it at but when you include costs, execution costs and slippage, you would get in at. But yeah, so if you can get this around 70 cents, I really like it. It's cheap, it's lovely, and well, as you can see by here on the heat map, will monetize very well over time. Although it's not the best if you want to see something immediate reaction from it. You will make money, but not huge, only 20, 30 cents if we look at the immediate reaction to it. But as I often say, it's about keeping you in the game. If you're going to do just 1 day options, it's just a pure punt. Having said that, I also did, go back here, a run of what if we disappoint, or as is often the case, it's called buy the rumor, sell the fact. Good old floor or trading saying. You may still, the numbers may be good. You may still be bullish. It may still be bullish, but your initial knee-jerk reaction may be the opposite. This often happens because you will have situations where people will pile in to something, are waiting for the release or news to come out, and then when it does, even if it is favourable, those people are going to try and get out because they're only in it for short term. So that's why I personally like looking to capture the trend that you'll get out of these numbers. So hence why on these strategies here, I've been looking out to December and September. For those though that want a short-term punt, we have the May expiration options coming up. Personally, like this one, if you want to have a downside protection, $2 to $7.5, $2.15 put fly. That one's around a buck. If you go try and do it now, a buck 25. That's just going to monetize for the next 2 days. If you're right, we go down to around the 7.5 mark. That is where your sweet spot would be. It will make a reasonable return on a downside knee-jerk reaction over there, as you can see, over the next couple of days if we settle on down there. So that one's a short-term play, which, as I said, I don't like them very much personally. The other potential, if you wanted to do a downside slightly better, and we'll go vanilla, doing the June expiration again. This will give you more legs. So downside play for Nvidia. Our system just likes a put spread. Now, bear in mind, this is not expiration trades. We don't come up with the bullshit that you're going to see everywhere else, where they're just looking at binary. Oh, you're getting a buck. It's worth 25 if it goes there, and that's what you could make. Because you don't do that. In reality, you get in and you get out. You don't run it all the way to the death. And so that's why we look at some longer dated stuff. So downside play here, I like these ones, the put spreads. 194, 182 put spread. That's the one he likes the most for a downside play. Getting in about $1.37 after costs. If you can buy around this level, marks at $1.27. So anything around there would be good. Gets in, as you can see here. That one monetizes really quickly as well. You could argue that it monetizes quicker and better than your short-term 2-day option. If you look back at that heat map, you'll see that that fly will work brilliantly by Friday. However, today it will make you 20, 30 cents. But on this knee-jerk reaction on a downside, to 207, you're making $1.30. You're really doubling your money on this put spread in June expiration. And also, you won't lose all your money if you're wrong. Again, look, goes up, you're going to lose 40 cents. Whereas on the fly or anything you're going to do with 2 days, that is gone. You're gone, it's gone, you're never going to see it again. And that's it. And this is a great example of why we look at stuff a bit further out. So just follow what we do. Don't follow what the fucking sheep do. Anyway, in other news, and I'm going to talk about this one tomorrow morning. It's basically 2 hikes. We just had the FOMC minutes out, and this was said, many policymakers would have preferred to remove their easing bias from the policy statement. Majorities say that hike is warranted if inflation persists, which is basically going to be down to the oil market. So that is, basically worth looking at for a downside play compared to any other markets. Currently, as I said, we're pricing in the chance of a hike. If this thing turns into a cycle, you will see more than one hike. You will see consecutive hikes. if history is anything to go by. So what I would like to do, I can quickly show you here anyway, because it's worth having a look at. We'll go to SOFA, and it was this one. I like these trades. The hang on 1 second, everyone. 1 second, please. I like this one here. Flyers, condors. We'll go vanilla for you here. It's worth looking at September even, but December gives you more chance to price something in. And either you're looking at this one here, it's a bit further down. This is the one I like. I like because it gives me a bit more of a chance. I like getting that higher strike up there, and also it's very low in its percentile ranking. So this is basically what this is doing, is looking back at the same structure, the same amount of equivalent out the money options, and linear fitting it all the way back, so we can do an actual comparison as to whether or not today is better value than it was previously. And if you can get this thing in for 1.5 ticks, just buy it. It's a lovely downside trade. It will make you money even on short term. It gives you a bit of leeway, and it's a lot cheaper, comparatively speaking, than it has been in the past. So this, like out the money, put condor is the trade you want to do. 60 plus. So sorry, as we term it here, the 56 plus, 7 plus, 8 plus, O plus, December, put condor. I'm going to have a look at a couple of others though tomorrow that are slightly a little higher up, so that even if we go for one hike with a 50% chance of another, which is going to see us in the mid 20s, mid to low 20s, if the case was actually, mid to low 90s. That is a possibility. That was where we're pricing at a similar point in the cycle historically. We were sitting around the 93 area for ages when there was a chance that that would happen. So I'm going to look for one that's slightly higher up and see what we can get in on that. Again, either looking at September or December expiration. So this one though is a definite 2 hike implication, and yeah, well, we might be able to get that cheaper now, given the rally in rates, and tomorrow I'm gonna have a quick shifty at 10-year as well, as we've broken back below the 4.625 area, currently yielding 4.575. Down, we did get up as high as 4.68 at one point. And of course, that has lent some positivity to S&P as well, just to mention that. If you have any interest in me doing any valuations for S&P options, DM me and I'll do a couple of runs on a system and give you the best risk reward trades to do. Anyway, as I always say, better be lucky than be good. So good luck to you all and have a great day trading. Come on, Nvidia. Have fun.